Hey everyone, welcome back to XRP Economic Radar, your go-to source for the latest insights and analysis on everything happening in the world of Ripple and XRP. If you're new here, make sure you stick around because today we've got some fascinating developments to share with you. We're diving deep into a surprising trend that's been driving XRP's recent price rally, and trust me, this is something you definitely need to know about. The data we're looking at reveals some unexpected shifts in how XRP is moving across different exchanges, and it's painting a very interesting picture of where the momentum is really coming from right now. So let's jump right into today's headline story. Ripple's XRP has been experiencing a fresh rally that caught the attention of traders and investors across the crypto space. And what's really interesting is the driving force behind this latest price movement. We're talking about a surprising exchange trend that's been unfolding over the past week, and it's not what many people would have expected. According to detailed analysis from CryptoQuant, one of the most respected blockchain analytics platforms in the industry, there's been a major shift in wallet flow activity that's directly correlating with XRP's price action. This isn't just random market noise either. The data shows a very specific pattern that tells us exactly where the buying pressure is coming from and which platforms are leading the charge. Let's talk numbers for a moment because this is where things get really interesting. XRP's price recently witnessed a solid rebound that pushed the digital asset from around $1.11 all the way up to $1.18. Now that might not sound like a massive move in percentage terms, but in the current market environment, any sustained upward momentum is significant and worth paying close attention to. What makes this particular rally stand out from previous price movements is the underlying data that supports it. We're not just seeing random buying across the board. Instead, the latest uptick has been backed by some very specific and changing wallet flow trends that are giving us clear signals about where the real demand is concentrated right now. Here's where the story takes a really fascinating turn. South Korea's largest cryptocurrency exchange, Upbit, has taken the absolute top spot for XRP deposit wallet activity across all major exchanges globally. Let me repeat that because it's a big deal. Upbit, which is already known as one of the most influential crypto trading platforms in Asia, is now dominating XRP wallet flows in a way we haven't seen in quite some time. The latest data reveals that Upbit's XRP net wallet flow dominance increased dramatically from just 13% on June 7th to a whopping 31% on June 14th. That's more than a doubling of market share in just 1 week. Even more impressive, this represents the highest level of dominance for Upbit since May of last year, which tells us this isn't just a small blip on the radar. So what does this dominance actually mean in practical terms? Well, when we talk about net wallet flow dominance, we're looking at the concentration of deposit wallet activity on a particular exchange compared to all other major platforms. A higher dominance percentage means that exchange is seeing more XRP flowing into deposit wallets relative to its competitors. This is significant because it often indicates where the most active trading and buying interest is happening. The fact that Upbit now holds the strongest concentration of XRP deposit wallet activity among all leading crypto exchanges suggests that Korean traders and investors are showing exceptional interest in accumulating XRP right now. This kind of concentrated activity on a major Asian exchange has historically been associated with strong price support and often precedes continued upward momentum. Now let's contrast this with what's been happening on other major exchanges, because the comparison really highlights just how unusual this trend is. While Upbit was surging in dominance, several other major cryptocurrency exchanges recorded declining dominance during the exact same time period. Coinbase, which is the largest regulated crypto exchange in the United States, showed the biggest drop of all. Their XRP net wallet flow dominance fell dramatically from 27% on May 7th all the way down to 0% on June 14th. That's a complete collapse in relative deposit wallet activity. This suggests that deposit wallet activity weakened considerably on Coinbase, or alternatively, that withdrawal wallet activity became relatively stronger compared to other exchanges. Either way, it represents a major shift away from the American exchange when it comes to XRP flows. The pattern wasn't limited to just Coinbase either. Binance, which is the world's largest cryptocurrency exchange by trading volume, also recorded a noticeable decline in dominance during this period. Their share slipped from 16% down to 13%, which might seem small but is still significant given Binance's massive user base and global reach. Meanwhile, Crypto.com, another major player in the exchange space, experienced an even steeper drop, falling from 9% all the way down to just 3%. When you look at all these numbers together, a very clear picture emerges. The divergence in wallet flow dominance across these platforms highlights that XRP's rebound was not supported by evenly distributed activity across exchanges like you might typically expect during a broad-based rally. Instead, what we're seeing is a clear rotation of activity toward Upbit, while major Western exchanges like Coinbase, along with global giants like Binance and Crypto.com, moved in completely the opposite direction. This is what makes the current rally so unique and worth analyzing carefully. CryptoQuant summed it up perfectly when they stated that the key takeaway here is that XRP's rebound is being driven by what they call a divided flow structure. In other words, this isn't a rally fueled by widespread buying across all platforms and regions. Rather, it's a more concentrated movement with Korean investors on Upbit leading the charge, while other markets show less enthusiasm or are even seeing outflows. This kind of regional concentration can sometimes lead to volatility, but it also demonstrates very strong conviction from the traders who are actually driving the price higher. From a technical analysis perspective, it's also worth noting what some of the prominent crypto analysts are saying about XRP's current price structure. eGrag Crypto, who has a solid following in the XRP community for his detailed chart analysis, recently pointed out that bulls remain firmly in control on lower timeframes as long as the price manages to stay above the range of $1.13 to $1.14. He identified $1.19 as the first major resistance level that XRP needs to break through to confirm continued upward momentum. If that level gets taken out with conviction and momentum continues to strengthen, the next target to watch would be around $1.26. On the flip side, he noted that $1.09 remains the main support level that bulls need to defend. If that support fails to hold, a drop toward $1.05 could signal that a deeper correction is in the cards. Now, let's shift gears and talk about what's happening on the institutional side of things, because this adds another interesting layer to the story. Even though most cryptocurrency exchange-traded funds are currently seeing investors pull their money out in what's been a challenging period for crypto ETFs broadly, spot XRP funds are actually managing to buck that trend and attract fresh inflows. According to data from Soso Value, which tracks ETF flows across the crypto space, XRP ETFs added almost $10.7 million over the last week alone. That's a pretty impressive feat when you consider the broader context. During that same period, spot Bitcoin ETFs in the United States experienced heavy outflows, totaling more than $314 million. Ethereum ETFs also ended the week deep in the red, with investors withdrawing nearly $15 million. The contrast couldn't be more stark, and suggests that institutional money is viewing XRP differently than the two largest cryptocurrencies right now. So what should we take away from all of this information? The big picture here is that XRP's recent rally to $1.18 is being powered by very specific market dynamics rather than general crypto market enthusiasm. The dominance of Upbit in wallet flow activity tells us that Korean traders are showing strong conviction and actively accumulating XRP, while Western exchanges are seeing less action or even net outflows. This divided flow structure creates an interesting setup where regional demand is driving price action, which can lead to sharp movements in either direction depending on whether that demand continues or fades. At the same time, the fact that XRP ETFs are attracting inflows while Bitcoin and Ethereum ETFs are bleeding money suggests that some institutional investors see value in XRP at current levels. Combined with the technical levels identified by analysts, traders have some clear markers to watch in terms of support and resistance as this rally continues to develop. That's all we've got for you today here at XRP Economic Radar. But before you go, I want to ask you for a quick favor. If you found this analysis valuable and you want to stay updated on all the latest news and developments in the XRP ecosystem, please hit that subscribe button right now. It really helps us continue bringing you this kind of detailed, data-driven content. Also, if you enjoyed today's video, smash that like button and share this with anyone else who's interested in XRP and the crypto markets. And don't forget to drop a comment down below letting us know what you think about this Upbit trend and where you see XRP heading in the coming weeks. Your engagement means everything to us here at XRP Economic Radar, and we love hearing your perspectives. Thanks so much for watching, and we'll see you in the next video with more breaking news and analysis. Until then, stay informed and trade smart.